Good morning, everybody. How we doing? Welcome back. We are here after a nice little day of relaxation for the most part yesterday. We're back at it. Pre-market prep session. For anybody who's new, we do this each and every day before the market opens, 8:45 a.m. Eastern Standard Time. We cover the important news, notes, information, trade ideas, analysis, and general expectations and sentiments surrounding the stock market and other markets to make sure that we give ourselves the best chance of success when it comes to trading, right? The only thing that's guaranteed in this trading and investing game is losses at some point. But you want to make sure that you win more often than you lose. And even further than that, just win bigger. You don't even have to win more often. You can be a profitable trader and lose more trades than you win. That's not what we aim for. Trying to get the camera to focus. It's not what we aim for, but it's possible as long as you have a system that allows you to win bigger than when you lose. So it's not an easy game, but it's a game that can become easy when you put a system in place and stick to that system. So that's what we're looking to do here today. And I'm excited to get back into everything, right? Get back into the flow. So good morning, Coco. Good morning, everybody watching. Make sure if you're here, drop a GM. We're here because iron sharpens iron. We're here because we're a community focused on closing the gap between where we are and where we want to be, right? And all of that begins with putting your best foot forward in the morning. So make sure that you are aiming to get 1% better because that's what we're doing here for each and every session. So drop that one in the chat, whether you're watching live or via replay, because if you get 1% better each and every day, right, that starts to have a compound return on investment that catapults you toward your goals. So I'm excited to get going what we have happening today. Great day yesterday to start the week with NVIDIA and AMD coming in quite nicely for us. And this morning we have inflation data. So we'll see what they have in terms of the inflation data, which is probably what we'll start here with as the top news. So trust the data. Responses are still coming in from the latest Survey Monday on Wall Street Breakfast, but there appears to be two big takeaways from the poll. With nearly 2,000 participants recorded so far, the first insight is that many subscribers are dealing with inflation just fine, whether it be through budget adjustments or income and asset gains. The sentiment has been reflected in the market's impressive advance, with the S&P 500 up 20% over the past 3 months. Whew. It's been a beautiful ride, with investors betting on the end of the Fed's rate hiking cycle and helping assure the central bank that it can start cutting rates later this year. Now, bigger picture, the other takeaway from the Wall Street Breakfast survey, and perhaps somewhat more of a surprise, is that nearly half of all respondents don't trust the figures published in the Consumer Price Index. That is so funny because I literally talked about this yesterday before close. So in terms of like the bullish and bearish outlook for CPI data today, right? Here's the bullish outlook. The bullish outlook is the Fed is looking to decrease rates at some point over the course of the next few months, right? So you want data that backs up your ability to do that, right? So generally you want positive data that gives you the ability to then say, okay, cool, we've gotten this positive inflation data. Now we can, decrease interest rates. So that is kind of the case, the bullish case for coming into the data this morning, right? And then the bearish case, which equally holds weight, is okay. Well, we know that February traditionally is a flat month. So far, February has been nothing but up. So it would make sense if we had inflation data that came in hotter than expected, right? And then that kind of pulls us back down because with February traditionally being a flat month, more likely than not, we don't end up, right, in the market. We end up slightly down or flat near where we opened the month. So both of those cases hold weight, and that's why whenever there's data coming out, you just want to generally limit your exposure. And if you do enter and swing anything, just understand that it's a lotto, right? Expectations are everything. As long as you have the correct expectations, you're good. If you think every trade that is mentioned or every opportunity that is mentioned is made equal, that's not true, right? This ain't an MLK speech. There are some that are going to be high risk that you probably don't want to be in if you have a small account. And then there are other ones that are going to be great A plus setups with confluence where there's multiple factors pointing to the same outcome and you can be very, very confident. There are other ones where you won't. If you treat each trade like they're the same, you will not succeed in trading, right? It's important for you to understand, okay, this one is a very far long shot where I might get one contract, right? Or this one is something I won't be involved in at all. And then looking at another one and saying, okay, this trade has been mentioned 10 times, right? And there are multiple different factors that are pointing to the same outcome. Maybe I'll get 3 of those. That idea of risk management and understanding when to go big and when to go small is so important. And if you are still developing that sense, which a lot of beginners are, that's why I'm here as a resource, right? Reaching out and asking is super important, because if you're like, hey, the winning trades that I'm in, I wish I was in more of them. If you're not in enough of them, then you probably didn't reach out to ask how heavy you should be, right? And if you're in too heavy on a losing trade, you probably didn't reach out and ask if this is a trade that was appropriate for you to be in. So asking and making sure that you're pulling from a resource that you have available to you is so key in this game, because if you try to do it by yourself, by your own volition, you will most likely not succeed, right? Because it is just such a tough game. And a lot of people don't have the endurance, the fortitude, or frankly the bankroll to not be successful for an extended amount of time, right? So you've got to do what's necessary to be successful. But in terms of kind of the data, one thing that I talked about yesterday when I said, okay, well, between the bullish and bearish outlooks on CPI, I lean to the bullish side. But it was also small exposure, right? So CPI data, we can check that out. But the reason why I lean to the bullish side is just because you can't really trust the data that comes out. As an econ major, like, you can swap in and swap out different variables and have it be called the same thing, and no one is any wiser, right? It's like with Black Friday sales. They're like, hey, Black Friday sale, this thing was 150, now it's 100. Well, if you look back, it was actually $100, and they just slapped a sale on it, right? And they say, okay, so it's just you're just moving the goalpost. And they can do this exact same thing with all of this data that comes out. Like, they just adjusted. And same thing with earnings. Like, earnings, when accounted for, minus like expenses and everything else, if we hold out all of our expenses, we made a ton of money. Yeah, man, so did I, right? Like, it's just if you hold out things, you can make things look a lot better. And that's what they do with a lot of this data here. So the headline number set to be released today, 8:30 a.m. Eastern Standard Time, is forecasted to drop below 3% for the first time in 3 years, helping to confirm disinflation trends in the U.S. It might be a sign of the times when trust in the government is hovering near all-time lows, but something deeper can be discerned and applied to investing strategies. They threw a question mark in the end of that. The easy answer is that consumers are likely to compare price tags to ones from their recent memory. And it wasn't long ago that things appeared to be way more manageable. Examples: prior to the pandemic in 2020, the median price of a single family home in the US sold for $249,000 according to Redfin versus $404,000 in the current market. And that's only across a span of a few years. A box of cereal that also used to cost several dollars has nearly doubled, while the same thing has happened with ground meat, orange juice, and other common items in grocery aisles. A deeper approach centers on how and what inflation data is being measured. Wall Street Breakfast subscribers were clicked to flag adjustments and revisions, as well as categories where people are feeling inflation the most, such as food and housing. The Consumer Price Index also has controversy surrounding its calculation method, while economists have questioned its use as an inflation indicator, and even the Fed doesn't give it as much attention when determining policy. So all that is important, right? Because we have data that comes out, but it's data that is skewed, right? It's data that we can't really rely on. And even the Fed doesn't use it as its core measure of inflation. They use PCE. So looking here, CPE versus CPI, the core personal consumption expenditures price index is the central bank's preferred inflation gauge, as it has a broader scope than the traditional price index. For example, CPI only covers out-of-pocket household expenditures instead of other expenses that are incurred in the broader ecosystem, and mostly factors in changes to consumer behavior, which can underestimate price increases. In parentheses, making it more of a cost of living index instead of one focused purely on goods. On the other hand, PCE reflects how consumers substitute their purchases and apply certain calculations to smooth out price swings, making it a better tool for the Fed to size up the macroeconomic environment. So I think that's important, because we change our consumption habits based on how the economy is doing, right? Based on how we are doing. So CPI doesn't adjust to that, right? It doesn't say, oh, people, spend less on these things when times are harder, which PCE does. So PCE just makes more sense, and it's a better measure. But CPI is kind of the one that markets give more attention to. So we can check out here exactly what went on in terms of that data and see what we got happening in the meantime. And it's important to point out as well, another reason why it's so risky is because last time we got CPI data that was better than expected, what did the market do? Dropped, right? So anytime you are swinging through inflation data, it's going to be risky. That's why it's important to be on top of, what you have going on in the week, and why the pre-market prep sessions are so important, because, we let you know that information. So let's see here. Market updates. All right. So US CPI month over month, January actual 0.3% versus 0.3% previous, estimated was 0.2%. So it came in hotter than expected month over month inflation data, which normally you'd construe as bearish. 3.1% versus 3.4%. Previous estimated 2.9%. So we came in, a little bit hot on year over year and also month over month. And we can see here how the market is feeling about that just by checking in. Yeah, SPY with some nice big red chewing gum. So that one SPY call lotto that I got for 2 days out will be cooked. Luckily, it did not cost a lot of money, roughly $60. We came in with some NVIDIA swings that ended up paying, cashing those out for over $1,000 per contract and some AMDs that we got for over 40% profit. So I'm fine with taking the L on one SPY call swing, but making sure, again, that you are bringing in more profit than what you're losing. That's the key, right? It would be different if I was like, yo, I'm super bullish on CPI tomorrow. I'm grabbing 10 contracts of spot calls. No, right? I'm fine to lose $60 after I've gained a few grand rather than me go gain a few grand and then give a few grand back because I don't know how to appropriately size because I have incorrect expectations, right? So throw a 2 in the chat if you understand that. Expectations, everything in this game. On the move, number 4 spot. And also, just to summarize, it looks like, right, that second more bearish outlook is kind of what we might end up getting, where again, February traditionally a flat month, we've gotten the up. Now, we can get some of the down to bring us back down to net neutral by the end of the month. So number 4 spot, NVIDIA briefly overtook Amazon's market cap on Monday to become the 4th most valuable U.S. stock. The chip maker's valuation now stands at $1.78 trillion, with shares ending 0.2% higher, while Amazon closed 1.3% lower with a market cap of $1.81 trillion. NVIDIA has benefited from AI chip demand, with the stock surging about 230% in the past year alone, while Amazon has gained about 77% over the same period. Earlier in the day, Bank of America strategist Michael Hartnett pointed out that NVIDIA's valuation has grown by $600 billion in the past 2 months, or the equivalent of one Tesla by market cap, obviously not one car. NVIDIA is also rated hold by Seeking Alpha's quant ratings, which consistently beat the market. So there you go. I don't know. I don't think we're all too concerned about the neck and neck race between the world's most valuable companies. But if you were interested, NVIDIA briefly overtook Amazon in that factor yesterday. Doesn't really move the needle. But outlook news here, gig economy, Uber, Lyft, and DoorDash drivers are planning to go on strike across 20 major U.S. and Canadian cities on Valentine's Day to protest declining pay, driver safety, and deactivations. Wow, that is annoying if you are doing a little Valentine's Day dinner and you're in the city and you planned on Ubering or Lyfting. Advocacy group Rideshare Drivers United is also planning a gathering outside of Uber's Greenlight Hub to bring attention to declining fares that have made ride-hailing less profitable for drivers. The industry has recently come under regulatory scrutiny over allegations of low compensation, lack of job security, and opacity in how wages are calculated. The planned strike also comes only a week after Lyft offered more pay guarantees to drivers, while Uber announced improvements to its driver app to enhance safety and offer more incentives. So probably not good for Uber, Lyft, and DoorDash there in terms of that news. But we see here the crystal ball once again coming in hot with continued strikes, right? Something we've been talking about for the past year and a half, 2 years, is that increase in strikes that are going on and also increase in firings and layoffs. A trend that will continue because it's just a dragon eating its own tail, especially when you add AI into the mix. It makes all of that so much more expedited. Crypto news breaking 50K. Bitcoin has topped the $50,000 level for the first time since 2021 as spot Bitcoin ETFs continue to attract investment after their historic approval. Spot Bitcoin ETFs saw net inflows of $1.1 billion last week, bringing inflows since their January 11 launch to $2.8 billion. Wall Street firms are now increasingly filing for spot Ethereum ETFs, the latest being Franklin Templeton. Quote, Bitcoin has upside potential due to the upcoming halving cycle and strong fundamentals, noted Seeking Alpha investing group leader James Ford. While the top cryptocurrency has gained about 18% this year, it remains well below its $69,000 peak reached in November 2021. In terms of today's markets, mixed bag, not much for me to really go over here because it's different than where we were since the data has come out. What else is happening? JetBlue takes off after Carl Icahn discloses stake. Citigroup, ticker C, gets new regulatory notices on counterparty risk. ARM surges as investors continue piling in after results. Beware of jumping into these stocks that have just been going crazy, right? They're super expensive, and also the IV is very, very egregious, right? So everybody might see like, oh, ARM, like that's the next big thing. I need to get some ARM call options. That IV is insane, right? Same thing. People are like, oh, I need to hop into super micro computers. SMCI, it's been booking it over the course of the past few weeks. You can make hundreds of percent profit and not be in super risky meme type moving stocks, right? Because those stocks, while yes, they might go up day over day, check a look at like how they're moving hour to hour. Like it'll be up and then just right back down, and then they sit and sit and sit. So it really destroys you if you're trying to trade them short term. If you don't happen to time that move and also take profit, because the IV is just so high that the cost of you holding that contract, in most cases, doesn't even make it end up worth it. More M&A, Gilead to buy CymaBay, ticker CBAY, for $4.3 billion. Judge dismisses Pharma, it's PH capital RMA, challenge to Medicare price negotiations. SunPower, ticker SPWR, surges after Enphase's outlook. Martin Marietta, ticker MLM, expands building material supply and $2 billion deal. And then with Super Bowl over, here, the best performing casino stocks. Whatever, man. I don't even care about that. But that'll wrap us up. Put a bow on it and take us out for this beautiful day that we have in front of us. Make sure that you're paying yourself, managing expectations, and just moving according to what the charts say is most likely to happen, right? Having the correct expectations is so important. There are a lot of people who did not pay attention to the fact that we had inflation data this morning. They came into today armed to the teeth with calls. And what are they about to do? Get those teeth kicked out, right? So it's really always the little things. It is always the little things that are going to separate those that are successful and have longevity in this game versus those that don't, right? You don't want to wake up to watch this session. Unfortunately, it'll hurt you, right? You don't want to, keep up with the Wall Street Breakfast newsletter. Unfortunately, it'll hurt you, right? Staying on top of the economic calendar, knowing when data drops, that stuff will hurt you. It takes 5 minutes, 10 minutes, 20 minutes, right? But it saves you thousands over the course of a trading and investing career. So make sure that you're tapped in, you're soaking up information, you're getting 1% better each and every day. If you do that, you can lay your head on the pillow with some gratitude, get some good sleep, wake up and attack it tomorrow. So speaking of attacking, let's attack the market today, but make sure we remain patient because that's how you get paid. And other than that, guys, I'll see you back here tomorrow morning for our next pre-market prep session. For all my people in the trading group, I have a Zoom at 11. So, if you have questions, ask me at like 10:30, not 10:59, right? But just a little heads up that I'll be in that meeting. So I'll be watching things, but want to let you know. Anyways, everybody have a great rest of the day. See you back here tomorrow morning. Peace.